Yo, what's good? Welcome back to Vusi Supreme Traders. I go by the name of Vusi Magz. If this is your first time finding yourself at the channel, like the video, subscribe, and comment, and watch till the end of the video. Also, click the bell notification icon. And I know this all sounds like a lot of things I'm asking you to do, but it's really not that like much. It's just a click of a few buttons and that's that, right? So listen up. Today's video already, you saw the caption, you saw the title, you know I'm about to get laid, right? Coming at you live, not at the Supreme HQ, somewhat the private locations right now. But listen up, today's video is an important one because I feel like these are the things you might need to be aware of. Either if you want to start learning how to trade now, or if you've been trading already, this might be some of the things you might want to have like in your mind. You might want to be aware of these things, right? So the title says things of fundamental principles that every trader needs to know. And these are the things that all the professional traders know, myself included. So because lately I've been feeling generous and stuff like that, I'm gonna make this video for you guys. Not even gonna charge you anything or whatever. I'm just gonna come and like let it all out. You might be aware of some of these things, but I feel like the more you know about such things and the more you're aware, then the better results you're gonna get, obviously, right? So let's go into it. Let's check it out, man. So like I said, we're talking about trading fundamentals every professional trader knows. Excuse me. So if you're not at that top tier level and stuff like that, you definitely need to be aware of these things, because these are what's gonna like give you that extra little bit of boost that you might need to get the results that you need and stuff like that, right? So the first thing, this really is like the most simple thing, the most simplest thing you might wanna like know. You might have thought about this first at like just as a passing thought, and didn't really give much thought to this, but pips are not more important than profit, right? So time and time again, like I've also come to learn this fundamental truth and principle in the of the markets through like very harsh experiences, right? I've been at places like at levels where like I bagged so many pips, so much profit, right? But because I'm waiting for the price to actually go hit my target or whatever, I failed to like close and secure the profit. And then say, for example, the way the trade was going, I was only 100 pips short from hitting TP. But at the same time, say the trade has been running for like 800 pips. Because of that 100 pips that I want to like secure, I totally lost sight of the money, the profit that I had already made so far, right? So I was like, nah, the trade is gonna go hit the TP, and then you let it ride, right? So when you leave it and you come back, you find that now you're back to like only 200 pips. So you sacrifice like more than 600 pips so you can like secure an extra 100 pips. So once you look at it from this perspective, right, you get to realize that profits are more important. Profits come first before the pips. Doesn't matter. Listen, pips are just this. I feel like pips are like this psychological barrier that's been programmed into most of the traders, because once you focus on the pips, it doesn't matter how much you made. It doesn't matter how much you're making, you will never ever be satisfied. And I know we can say the same about the money, right? But the thing is, you can make 800 pips, right, with a small lot size. Let's say you can make $10 from 800 pips using a small lot size, right? I can make $500 from less than 300 pips using a bigger lot size. So once you like lose this idea of always prioritizing on the pips, and you actually now start to focus more on the money than the pips. Because listen, I'm not saying once you're trading, it's all about the money. I mean, trading is solely about the money, but your aim should be to actually make money, not to make pips. You can't withdraw pips. You only withdraw money. So focus on the only thing that only matters, which is your money. If you're having a trade that's doing good, you don't have to wait for the trade to go and hit TP. If that trade has been running the whole week, you don't have to like, it's not a must for you to like let the trade run throughout the weekend and see, or like let it so you can run for the next week or whatever. If you feel like the market might be volatile and open and gap up or gap down, just secure the trade. You made money. At the end of the day, that's why that's what got you into trading forex, because you wanted to make money. But now that you're making money, it's so hard for you to secure a profit. It's so hard for you to close a small loss, right? Because this goes both ways, right? It's so hard for you to close a small loss because you were just looking at the pips. Nah, this thing is gonna turn, it's gonna turn, it's gonna turn. Just close the loss. When it turns, that's when you're gonna open another trade, right? But listen, I'm not advocating chasing markets, because that's also one of the things that like I'm gonna talk about in the next point, right? But check this out. Don't focus on the pips. Focus on the profits. You don't withdraw the pips. You can get a lot of pips and make like small money using it because you're using a small lot size. I can get like not even a lot of pips. I can get less number of pips than you made, but I can still make more money than what you made, because I can be smart with my lot sizing. I can compound on a single trade and make 3,000 pips from a trade that was originally 500 pips, because I compounded my trades in the same direction and I trailed my stop losses and stuff like that. So you gotta always play the game smart, because if you do what the rookies are doing, don't expect to get really that far, right? You need to like play the game like the pros. All right. The second principle that I also learned, because this, guys, all these things I'm telling you, I'm not just like, you know, making them up or whatever. I had to go through my trials and tribulations before I could actually get to this level that I'm at right now. And the second thing is cut losses quickly. I don't know how many times I read this, how many times it's like I went through this when I was reading trading books and stuff like that, right? I don't know how many times I would, like, even on Instagram posts, even on those motivational trading pages and stuff like that, I saw so many times they were saying cut your losses quickly. I thought I internalized it, right? I thought I did, because to my mind I was just like, easy, that means I'm gonna just close my losses and stuff like that. But now, once you trading and you get emotional, all these things fly out the window, trust me. So you need to completely detach yourself from the account that you're using. And if you know, or if you see in my other videos, then you know that I've been saying I always withdraw. I don't focus on the pips, I focus on the profits. So the profits that I make, I need to actually hold them, even if I don't hold it in my hand, but I need to hold it at least in my card. You understand? So I always withdraw. So in the case that it happens that I slip up and blow an account, I can fund it same time. It doesn't mean I'm gonna open a trade same time, but I always be in a position where if it all goes west, there's always money to like fund an account and stuff like that. So now talking about cutting your losses quickly, the thing is, if you're using a lot size that's way more than your account can handle, then I really can't expect you to be detached from the trade. So if that trade goes south, then obviously you're only human, right? If it goes west or goes south or whatever, but you're in losses, and this is a very big trade, right? It's a make or break your account type of trade. Obviously you're gonna hold on to it, but I just don't understand why you'd wanna put yourself in that position first. Because you've been trading for like 3 months now, you've been making gradual progress, and like when you look back at it, you can see that this person, this guy or this chick has been making progress the whole time. But now, after 3 months, you just want to go from 0.10 lot size to 1 lot, a standard lot, and you're expecting to flip 600 that you raised over 3 months or whatever. You're expecting to flip it into 3,000 in a single trade. So you already that emotional, I don't want to say emotional commitment, but you're so emotional over this one trade that you are not going to go into it with like the logic and reasoning that's required for trades, right? So all in all, you need to know that, like, listen, always be at the top of the game. Never allow yourself to get emotional over a trade. You do this, and I repeat, you do this by capping your trades, right? Stick to a plan. These are things that you already know. These are not part of the fundamentals. Stick to the plan. Stick to a lot size that your account can handle, and always open a trade where use a risk management where it allows you to actually accept to take a loss, because that's where you get to learn about your system. That's where you get to tweak your system after you make mistakes. So if you're not really making mistakes, it's probably because you're not allowing yourself to go through the journey of being a professional forex trader, right? So the last, but certainly not the least important point that I want to get across to you, or principle that I want to get across to you, is when you go into higher time frames, there's less noise, right? So smaller time frames have more noise than higher time frames. What do I mean? So if you're trading using 15 minutes time frames, 5 minutes, 30 minutes, let's just say less than an hour. Even an hour sometimes is noise, guys. So what I mean by noise is there are more fluctuations in the price when you're using smaller time frames. So if you go to a 5-minute time frame, guys, you're gonna see 50 trends throughout the whole day. It's gonna go into uptrend, downtrend, sideways. Listen, even trends you don't even know, secular trends or whatever, right? So that's what I'm saying with this. Smaller time frames have more noise. It doesn't mean that you can't make money in the smaller time frames, but you just need to understand that if you're going into a smaller time frame, it's not going to be stable at all. It's going to be more volatile, right? Higher time frames are more stable. They are more like, they can stick to like trends longer, because in smaller time frames the trends are there for like a few minutes, at maximum an hour or so, right? But in the higher time frames now, that's where you can actually get trades where they can go long term and stuff like that. But if you're doing an analysis on short term, as in the smaller time frames, don't expect your trades to go out. Don't expect to be holding trades for longer than days and stuff like that, because trust me, you are not seeing the bigger picture into like the whatever chart that you're looking at in 15 minutes. I don't care what you say, but you're not looking at it from the bigger picture. So what I actually advocate to most of the people that I teach is go from the top down analysis. Analyze using the higher time frame, right? So you can get the bigger picture. Then go in depth and go like go and isolate that specific part that you're about to trade, either in a smaller time frame or whatever. But as long as you're aware of what's going on in the bigger picture, you can zoom in, go and isolate that place in the price there, and then open those trades and stuff like that. Because remember, we have different kind of trading styles, right? We have the scalpers, we have the swingers and stuff like that. So for the scalpers, they also make money, but they know to isolate the price, not the price. They know to isolate the chart at that specific zone. But make no mistake and never think that they don't also look at the higher time frames. They might not, but more often than not, these people are also aware of what's going on in the higher time frames, right? So that's all the fundamentals that I got for you guys today. Obviously, there's more stuff. I'm gonna keep making content for you guys, so don't feel like I missed something out or whatever. Just get a video request or whatever. So if I repeat, profits are more important than pips, right? Cut losses quickly. Detach from the account that you're trading, right? And last but not least, smaller time frames have more noise than higher time frames, right? So if you're still watching to this far, thank you guys for watching. You guys have been awesome, and subscribing to the channel. I really appreciate that. I'm gonna keep it coming with the content and stuff like this. So leave a comment, like, subscribe, bell notification icon, like I said, smash that shit. I'm gonna see you guys on the next one. All right, peace out.